Okay, that's all I need to say for superannuation. So the last part of it is really looking at social security and welfare changes. As I said, the main theme that came through the budget itself is really the number of changes that we've seen that sort of encourage greater participation in the workforce, and that sort of flows through the welfare changes as well. Some of the changes that comes through along this line from 1st of July 2011, youth allowance recipients extended to 21, and then aligning it with New Start allowance from age 22 onwards, for example. Encouraging single parents to transition into paid employment. I'm not going to go into detail with any of this, just to make you aware of some of the changes. Increased participation requirements for new and existing DSP recipients under the age of 35. We'll cover that in a later slide with a bit more details on that particular issue there. As new date for paid paternity leave, so we've had paid parental leave in place now. So this is paid paternity leave to allow the other spouse to obviously share the responsibilities. That will be delayed by 6 months to 1st of January 2013. And will be 2 weeks paternity leave paid at the national minimum wage. In terms of considerations, I guess clients, if falling into this category that needs to who are impacted, should consider the impact of reduced benefits as a result, if any, or perhaps, I suppose then, as the theme is trying to drive, is to consider transitioning back to workforce sooner rather than later. Next change, quite a bit of changes here in the family tax benefit, and you would have obviously heard on TV, seen the press about changes in the family tax benefits. From 1st of January 2012, the FTB Part A is to ensure that assistance to the family who have kids falling in that sort of age bracket, the assistance that they actually get do not sort of fall off upon hitting the age of 16. And if you believe and trust surveys that say, look, teenagers, and I can attest to that, teenagers sort of beyond 16 to 20 years age probably do require more dollars than those who are younger, and I can certainly understand the feeling there. It's to ensure that the system doesn't sort of drop off once a child hits 16. So to do that, the government has proposed to increase the FTB for those in the 16-17 bracket to be increased by $4,208, and 18 to 19 increased by $3,741. So what that's doing is really to align with benefit payments for those under those age brackets, but on the requirement that they must be still at school or vocational type equivalent. From 1st of January 2012, the FTB Part A is reduced to age 21. Again, it's just sort of aligning various benefits together. Another point which will be pretty useful in terms of obviously getting the benefits up front is from 1st of July 2011, there's available an advance for up to 7.5% of the annual FTB Part A, and there's maximum of $1,000 that could be done in this case. Having said that, the upfront payment will then needs to be recovered over 6 months by the Centrelink through a reduction in the FTB payments. So we've got to be sure that we can get it advanced, but again, we've got to ensure then, if we got the advance, that we do understand that over the next 6 months, then it will be reduced, the payments that we normally get on a regular basis. To access that, we've got to, Centrelink needs to assess the ability of the family to repay back the amount advanced, which is fair enough. So all in all, it's pretty good changes there. With the advance payment, we've got to make sure that clients can manage it. It is important that they do understand that it is advance, it's not an extra benefit that they're getting. So therefore, if you do get an advance, and advance means exactly that, you've got to repay back in due course. Not so good news, I guess, on the FTB front. And it's sort of coming through in a number of places. It's freezing of indexes, freezing of thresholds. So pretty much people who with improved income and improved sort of benefits would have to be caught out. So the first point there is freezing the FTB Part A and B 726 approximately, and 354 for Part B. Various thresholds are going to be frozen as well too. I'll probably pretty much leave it with you, the different thresholds there that are affected. The Part B primary earner income limit, that's 150 being frozen. So again, if there's a salary increase and you're pretty close to that limit, then that you will cease getting the benefit there or reduce amount. The income limit for dependency tax offset, the baby bonus eligibility, paid parental leaves, I'll just leave. I won't read out the numbers. You can certainly read it just as well as I can there. What I want to say there is the impact. So some of the clients over the next few years could potentially receive reduced benefit because of the frozen thresholds there, and you need to obviously plan ahead for that. Last but not least, I did say that there have been changes to the DSP, disability support pension. So what we've got here is recipients able to work up to 30 hours a week and remain eligible for part pension for up to 2 years. So that's really encouraging them back to work plus getting the pension. Couple of points here. It applies from 1st July 2012 to new and existing recipients under the age of 35. So again, it's an encouragement for them to work, and they will need to be assessed to have some work capacity to do that. They will also bring forward the efficient and accurate assessment for DSP. So that will be brought forward to September 2011. So a bit more tougher regime for the DSP going forward. It's really pretty much making sure that it is directed to people who genuinely are entitled to it and under the rules that we've got. So making sure that if they can get back to work, then they certainly should do. For those affected clients, again, I suggest that perhaps they prepare for these changes, and perhaps if need to be ready for it sooner rather than later. So I guess we've gone through quite a number of and discussed a number of the changes, a lot of the impacts as well too. And in conclusion, it was, as I said, it was quite an interesting budget. A lot of changes, but perhaps numerous, but not really major ones. But it does sort of impact across the board, if you like. So in conclusion, I'll say it's sort of measures to provide a higher level of benefits to taxpayers, generally being offset with pretty much tightening of other areas, particularly trying to encourage them to get back to work there. Not all clients are impacted in the same way, so just be careful. I'll sort of try to generalize as much as I can, but armed with the information and some considerations of the impacts, it'll be good for you to get out there back to your clients and consider them in their specific situations there. Self-managed, it'll be interesting to follow the progress there. The changes that are being proposed, so all good thing. We do need to tightening up in that particular area there. So we need to plan ahead to achieve the best results. But don't forget, pretty much these announcements are still proposals. As I said, we've seen some bills coming through. That doesn't mean those are finals as well. As we know, with the government in its current position as well, getting through houses, the parliament can be quite a difficult thing. And it very much, again, depend on a lot of important policies, negotiations coming through, issues such as the carbon tax and mining tax, which pretty much be obviously in the back of mind to think about that and to flow through into all these changes through. So pretty much that's all I need to say. I know I've run a bit over time, but they were all useful information and strategies. So thank you for those who stayed on, and I hope that's been all useful. And watch out for more of our reviews and points going out through to you to keep you up to date. Thank you very much.